Welcome back to the channel. It's me, Adam. You're watching Unlimited Options Investing. Another week of madness in the markets with both stocks and crypto being quite volatile. So on Wednesday, the Fed, Jerome Powell talked and investors liked what they heard regarding interest rate hikes next year, as well as the tapering of bonds slowing their purchases. So investors liked what they saw, and it looked like we were primed for a Santa Claus rally into the next couple of weeks. And what happened on Thursday? A big red candle, and that happens. Those are the markets for you. They are volatile, and these things happen all the time. Just as easily as it went down, it could have gone up, and we'd have a completely different narrative right now. Hindsight is always 2020. So in this video, we're going to take a look at a bunch of different charts: Shopify, Nvidia, Amazon, Bitcoin, Ethereum, a bunch of our favorites. If this is your first time stumbling on the channel, welcome aboard. Hit that subscribe button here at Unlimited Options Investing. We talk everything stocks, crypto, options, ETFs. We're investing for the long term. I'm talking 5, 10 plus years in the markets. As well as always, smash that like button. Guys, let's get started. All right, so the first stock I want to take a look at is Tesla stock. And this is the one that everyone has their eyes on right now. It opened up the week below 1,000 and dropped all the way down to the 20 EMA on the weekly. And we're going to be taking a look at a lot of weekly charts in this video because there's a lot of very key areas that I want to take a look at. And the big thing that traders are looking for right now is that we have filled the gap on Tesla. So from 910 all the way up to about 950 in that last week of October before Tesla stock really ramped up, we had that big gap up and we were looking for it to eventually fill, and it just did just today. Because if we take a look at the weekly, we opened up right at that 910, 909 level, filled that gap, and we went all the way back up to about 950. So this isn't to say that we can't continue falling below the 910 and go to 900 and fall below 900. That's very possible to happen, but at the same time, it's also noteworthy that we have filled in that gap again from the end of October. So let's go back to the weekly. Let's take a look at our favorites, Apple and Microsoft. So let's first take a look at Apple, and this one's pretty detached from both moving averages. From that 20 and that 50, we had a pretty big run up on Apple from mid-November when we were at 150 and going all the way up to above 180, and then right now we're sitting at about 170, 175. And this stock and Microsoft both really leading the way, while there was a lot of weakness in the S&P 500 and the NASDAQ over the past week or two. And weakness with Microsoft this week, we opened up the week at 340, and right now we're sitting at 324. With that 20 EMA on the weekly looking pretty juicy at around 310 if we were to reach that level. That would be a pretty nice spot to pick up on Microsoft, because if we take a look back and we look back and back and back, Microsoft bounces off that 20 EMA on the weekly almost every time. Take away the pandemic crash and you go further than that, you see the weakness at the end of 2018. But before that, that 20 EMA holds up very, very, very nicely. So it does hit that 50 when there is weakness in the broader markets. But other than that, it really likes to respect that 20 on the weekly. Looking at Google, similar idea as well. We're sitting very closely on that 20. We scroll back, Google respects it over here. We're over here. Not so much at the end of September, it respected that 50. So these are just patterns to pick up on when there is weakness in the market, when there is fear, uncertainty, and doubt going on, and you don't know what to do. The flight to safety is in these big tech stocks, and with good reason. And that's what the charts have been telling us. Next up, we're looking at Amazon stock, and this is one I'm really looking at eventually breaking out. And ever since that March correction earlier this year, we have been making higher lows slowly, so it'll be interesting to see if we're able to continue that trend or if it's going to break it. But again, Amazon has been consolidating for quite a while, but as we've seen in the past, when it does rip, it can really rip. So this is accumulation phase for a gold metal stock, similar to Google and Apple and Microsoft, those 20 and those 50 EMAs on the weekly. So again, Amazon likes to respect that 20. It fell below in March of this year, it hit that 50, respected it, and went back up to the 20. We went back to the 50 a couple more times, and then we're there right now, and we had touched it earlier this week. So we want to see if we're able to hold that, if we can continue making those higher lows. Or Facebook or Meta platforms, this one on the weekly, stuck somewhere in no man's land between that 20 and that 50 EMA. It's been trading in a channel ever since it corrected pretty nicely from 380 all the way down to about 306. Right now sitting at 333 for most of the week, anywhere from 330 to 340. So we break these channels below 300 pretty much, or above 345, 350, Facebook is going to continue trading in our channel. Next up, taking a look at Nvidia on the weekly, and this doesn't look very healthy right now. It looks like a bubble could be popping, reaching a peak of about 345. Now this doesn't necessarily have to continue, but we are looking at the 20 EMA as a pretty solid point of interest, just like the rest of the big tech names. If not, that 50 EMA all the way down at 200. That would cause a lot of pain, but it may be necessary for a breather for the stock after such an epic 2021. As low in March at 118, going all the way up to, again, 345 or 350. Now, it doesn't necessarily need to correct all the way down to the 20 or the 50. It could consolidate at these levels, and this 20 and the 50 could catch up to the price action as it consolidates. The big players accumulate, and one can trade the volatility in the meantime by selling options perhaps. Lastly, and then we'll take a look at the indices and crypto, Shopify stock. So this one, again, is trading right at that 50 EMA on the weekly. We went a little bit below that at about 1275, 1280. Now sitting right at that 50 again at about 1330, 1340, 1350. Another company I really like for the long term is well off its all-time highs that it had just hit maybe a few weeks ago, maybe a month ago, all the way up here at about 1750 or so. So that's why I find it really important to look at all the different time frames. You can look at the 1 day, the 1 week, and even if you don't day trade, like I don't day trade, but I also look at the 1 hour, the 2 hour, the 4 hour charts just to get an idea and a feel. It's a very similar thing, but it's much more dynamic at those smaller time frames. But when you zoom out and take a look at the weekly, the monthly, it can sometimes help put things into perspective. You're seeing it in a different dialect or a different translation. Again, helping putting things into perspective. Next up, looking at the FANG index. So Facebook, Apple, Amazon, Netflix, and Google. A similar idea. We're approaching that 20 EMA on the weekly. We're not quite there yet, so there could be a little bit more room to fall in those mega caps. But as we can see, ever since September or October of 2020, we have pretty much very nicely respected that 20 EMA. Even if we fall below a little bit, we often close right above it. And when we take a look at the SPY, similar idea, we really respect that 20 EMA. And that's going to be more cause for concern, at least in the short term, where the next point of interest could be that 50 EMA or really anywhere in between. But right now we're holding it very nicely. Similarly, the NASDAQ, again, we're above that 20 EMA. No cause for panic just yet. Let's see how the next few weeks go. We don't have any big negative catalysts coming up, so let's see how we proceed in the upcoming weeks. And lastly, crypto. So let's take a look at Bitcoin. So here again, when we look at the last time crypto bottomed at this area around 29,000, on the weekly, we were below that 50 EMA at a point, and we're now approaching that point again. Are we going to fall below that, putting us below $43,000, $44,000, or are we going to maintain these levels just like we did back at the end of September? But again, if we reach below that 50 EMA, that could be a very interesting point to be buying. But as we can see here, we were below that 50 EMA quite a few times, so who knows? I do like to look at Bitcoin for the most part at smaller time frames because it's so volatile at that 4 hour, but again, it's nice to have the perspective of looking at it at the bigger time frames. And likewise, when we take a look at Ethereum, so this one topped out at 4,800 back in the middle of November, and right now we reached that 20 EMA and we bounced off of it. And if we zoom out all the way back to May, when we were below that, we were between that 20 and that 50, so we didn't go below the 50 the same way that Bitcoin did. But now, ever since, we have been respecting that 20, and to me, that is very, very interesting. So that's why I really like the weekly timeframes, because they give me a better perspective on the price action and gives me a different view that I wouldn't necessarily see if I was looking at the 1 day or anything smaller than that. All right, and that's the end of my video. Thank you very much for watching. Let me know in the comments below, did you buy the dip? Did you sit tight? What are your thoughts on the overall macroeconomic conditions? Let me know in the comments below, guys. Thank you very much. As always, subscribe and like, and I'll see you in the next video.